Hello again, everyone. It's This Week in Agribusiness meteorologist Greg Solier. We're back in for Max Armstrong. Welcome to Farm Progress Dateline Drought. Our continuing coverage of the drought of 2012 is brought to you by Genuity Drought Guard Hybrids. Lots to talk about, so let's get right to it, shall we? An update on drought conditions across the country, a forecast over the next 90 days, at least from the Fed's thinking on whether we see improvement, additional improvement to drought areas or worsening over sections of the plains, and that 6 to 10 day outlook as well. It's loaded up with some optimism and a big pattern change, at least in the short term. We'll talk about it this weekend on This Week in Agribusiness. Heads up across the northern plains, back in the big sky, parts of the western Canadian prairie. There's midwinter cold on the move. Big trough for U-shaped configuration to that jet stream pattern into the west. We've got moisture in one form or another. Montana, the Dakotas, and a trend south and eastward on what turns out to be a far more active and, yes, moisture-laden weather pattern here in the days, the next couple of weeks to come. We'll certainly keep you up to date. In any event, here's the latest drought monitor as of the 30th of October. You can see and certainly testify to the improvements from the lower Great Lakes to the Delta. Tile lines are running for a change over the eastern belt. Note the big improvement into the northeast of New England. Obviously, Sandy complementing at least the moisture pickup there, but of course, excess of storm damage and wind. This will be a long-term cleanup here. Pacific Northwest looking much, much better. 90-day outlook with regard to seasonal drought conditions, and they continue on, at least from the Fed's thinking now, from areas of South Dakota southward. We think this is a little bit pessimistic looking, but do agree with the pickup and through areas of Montana, the Dakotas, upper Midwest, Great Lakes region, points southward and eastward. This is a trip off of El Nino. Moisture on the increase and drought conditions easing in all places of central and southern California. Very disappointing monsoon season out there into sections of the southwest United States. The outlook over the 6 to 10 day time frame shows this wide range of temperatures with well above average readings from Texas into the Great Lakes region. Looks like cooler, drier east-northeast wind flow will keep readings below average across the Carolinas. But look at how the cold air carves itself out across the Pacific Northwest and West. That's usually an indicator of moisture on the increase, and by golly, we've got it. While it's still dry in the short term, California, southwestern states, look at the pickup on moisture across the southern Canadian prairie, northern and parts of the central plains, and over a wide area of the Corn Belt. This is just the leading edge of what should turn out to be fairly moisture-laden weather systems for the next few weeks. We'll keep an eye on it for you, of course, with that 4-week forecast on This Week in Agribusiness. Speaking of which, we hope to see you this weekend. Remember, safety first out there with outdoor work and fieldwork operations. Now on to Bryce Noranda. Look at markets.
Sometimes it's hard to tell why prices are moving lower. Today, there were multiple factors pushing soybeans sharply to the downside. Fundamentals, technicals, and just plain old fear weighed on prices. The fundamentals came from the supply side of the balance sheet because the demand side was strong. Weekly export sales were good at 28 million bushels. But more private estimates of production out ahead of next week's USDA report were higher. While I think the crop is only 13 million bushels bigger, Informa estimated production up 59 million, and FC Stone was 89 million higher. The fear was seen in a variety of markets as well after a bigger than expected increase in job creation during October. Now you might think that it'd be good news to investors and traders to see more jobs created. Instead, they believed the improvement was a sign the Federal Reserve might slow its quantitative easing, which has flooded the market with cheap dollars, some of which bought commodities. So the dollar gained sharply, commodities sold off with gold down $37.50 an ounce, and crude oil losing more than $2 a barrel. The stock market also took it on the chin with the Dow down almost 140 points. So much for good news. The sour mood compounded chart-based selling in soybeans. January futures couldn't hold its 30-day moving average, and selling intensified when the contract broke below support at the trendline drawn off October lows, testing 2-week lows, closing down 33 1/4 to 15.26 3/4. Informa and Stone actually lowered their corn production estimates, but both are higher than USDA's October estimate. For the record, I see production headed the other way, down 275 million bushels. But corn also got bad news about exports. Sales totaled just 6.6 million bushels in the latest week, leaving year-to-date export commitments at the lowest level since USDA began archiving the data in 1987. December corn broke below its 100-day moving average and tested 3-week lows before finally holding, closing down 11.5 at 739.5. Wheat exports weren't anything to write home about either, at 13.3 million bushels, but weather problems around the world supported prices. Chicago December wheat held the test of its 100-day moving average for the third time this week, moving well off its lows by the close to settle at 864.5, down 4. Kansas City fared better, buoyed by gains in the new crop contracts on concerns about the poor condition of the hard red winter wheat crop. Casey December finished up a quarter at 908 3/4, while Minneapolis was down 3 at 940 1/4. Keep up with the drought situation across the country by visiting www.datelinedrought.com.